Hello everyone. In the midst of global stock sell-off over the past 7 days, I completely forgot and missed about the RBI's interest rate decision today. So in this video, let's look first what we can expect on the monetary policy meeting, and then after that we'll discuss about our regular pre-market stuff for today 8th August 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Trust me, there is a high chance of surprise today, and let me tell why. So without delay, let's get started. We know there has been lots going on in the world right now. In addition to that, one of the reason why the market didn't give much importance to this RBI interest rate decision is as most investors expecting it as a no change or non-event. Like the wider expectation is that the RBI will keep the interest rate same or pause at 6.5% for the 8th time in a row. But I think there are two ways where we can have some surprises. For example, if required, please pause and have a look. Between May to September 2022, RBI was increasing the interest rate at the rate of 50 basis points each. Then at the September meeting, first time MPC member Ashima Goyal voted 35 basis point increase rather than the 50 basis point increase. Then in the following MPC meeting in December 2022, 5 members voted for 35 basis point increase, which was the reduction from the regular 50 basis point increase in the last 4 times. Following the Goyal terms. And in the same meeting, Jayant Verma voted for the pause in the interest rate decision. After that, in February 2023, both Jayant Verma and Goyal both voted to pause the interest rate. But still, on the February MPC meeting, other 4 voted to increase 25 basis point. So on the February month, as an outcome, RBI increased 25 basis points. But after that, for 8 times or around 1 year, RBI kept the interest rate unchanged 6.5%. Then between March and April 2024 time, only Jayant Verma voted to cut the interest rate by 25 basis points. Still, the majority, other 5 voted to keep it pause at 6.5%. However, in the last June month meeting, 2 MPC members, Jayant Verma and Ashima Goyal, both voted for 25 basis points interest rate cut. So today, by chance, other 2 members voted to cut the interest rate decision means then that is a huge surprise in the market. Most probably cutting the interest rate is always positive, but there are instances market took those as negative as well, like demand concern. Hence, as I said, anything other than pause will drive the market significantly today. So please be cautious. Interest rate decision is at 10 a.m. in the morning. In addition to this, market will look for 3 other things: monetary stance, GDP growth rate, and inflation yearly and quarterly target. The June month monetary stance is withdrawal of accommodation, which means the stance tilted towards the rate cut. By chance, if they changed that to neutral stance means then it's disastrous for the market. Second, in the last MPC meeting for the present financial year, RBI increased the projected GDP growth rate to 7.2% from 7%. So now if RBI maintains the GDP growth rate to 7.2% means then it's neutral. If they reduce it to 7%, then it's negative. By chance, if they increase it to 7.5% means then that will be very much bullish for the market. Moving on, if required, please pause and have a look. In June month monetary policy meeting for this whole financial year, RBI forecasted 4.5% inflation, and for Q1 4.9 and for Q2 3.8%. Again, if there is any change in the number means then the market will possibly react to it. And finally, after a long time, only at the present, Indian banking system having the liquidity surplus of around 2.8 lakh crore rupees, which is positive. But if RBI announces any measures to reduce the liquidity for the inflation control purpose means then that will be considered as negative for the banking stocks, particularly the large one. That's one of the reason why Bank Nifty is little nervous compared to Nifty. Okay, that's it. That's all I want to discuss about the today's RBI policy meeting. Let's move to the US market last night. Because of the very good global momentum, US market opened 1.5% positive. However, around 10 a.m. Eastern Time, US government 10-year note auctioned for higher yield due to demand concern, which then started the profit booking. In addition, super Super Microcomputer, one of the semiconductor stock, missed the analyst estimation, so that fell around 20% and dragged down the whole semiconductor index. So overall, S&P 500 from around 1.5% positive earlier, it dropped to around 0.8% negative. Whereas Dow Jones down 0.6% and Nasdaq down above 1%. In case of VIX, it's roughly same as Tuesday night, around 28. Only oil sector closed positive because oil price increased over 3% since the US oil stock inventory fell below expectation. At the time of this video, Brent crude trading around 79 US dollars per barrel, whereas WTI crude closed at 75.5 US dollars per barrel. Regarding Indian ADR, in line with the Indian market, only HDFC Bank ADR closed positive of around 2%. Whereas both Infosys and Wipro closed positive of 2% in Indian market, that in US ADR turned negative, especially Wipro, which was down over 1%. In case of ICICI Bank, it was flat to negative. So overall, banks looks okay or mixed, but IT stocks seems negative. In line with that, GIFT Nifty at the early morning today, it closed at 24,140, equating it with the spot market. For now, it's indicating the gap down opening of 200 to 240 points. About institution, again yesterday FI was mega net sellers. Looks like they are not stopping the selling. Yesterday the net sold for approximately 3,300 crore rupees, whereas DA net bought for 3,800 crore rupees. So as a summary, there is no concrete negative news that I'm aware of, but because of US market was down and the GIFT Nifty is indicating over 200 points gap down opening. However, as I said, please be cautious. Based on RBI policy, the market can turn around. About the things to look out, before our market opening, Bank of Japan summary is due to release. Then at 10 a.m. RBI interest rate decision, and in the night for US market, weekly jobs insurance data, 30-year bond auction and Fed balance sheet are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened 300 points gap up and it was positive throughout the session. I'm guessing due to short covering. However, it was very much range bound and closed near the opening 24,300. Thus, on the daily chart, Nifty formed a doji candlestick pattern. Hence, again Nifty defended 50-day exponential moving average around 24,000, and in addition, both hourly and daily RSI momentum indicator indicating a positive crossover. So, all these parameters are indicating that Nifty expects to have a pullback. Hence, the next level to watch on the higher side will be 24,400, but significant upside potential is possible only if Nifty fills the large bearish gap that created on last Monday, which is around 24,700 zone. Above this, 25,000 level becomes the next crucial point, while 24,000 remains a crucial support level. In case of Bank Nifty, it also opened 500 points gap up and rebounded, finally closing at around 50,120. Thus, on the daily chart, Bank Nifty formed a small bearish candlestick pattern with a long lower shadow. This long lower shadow means market was pulled down by the sellers, but the lower level buying supported the market in the late hours. Hence, Bank Nifty can witness a pullback over the next few trading sessions till 50,600 to 50,800 from short-term perspective. On the downside, 49,800 to 49,700 is the crucial support zone. Regarding the weekly options data, the maximum call option open interest was at 25,000 strike, followed by 24,800 and 24,500, with maximum new call option writing at 24,700 strike and then 24,600 and 24,400. On the put side, the maximum open interest was at 24,000 strike, followed by 24,100 and 23,500, with maximum new put option writing at 24,100 strike and then 24,200 and 24,300. Thus, from options data, 24,500 to 24,600 is the resistance zone on the higher side, with support at 24,000 to 24,100 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.